Hello and welcome to this in-depth look at the iShares Russell 2000 ETF, or IWM for short. First, let's start with a brief overview of what IWM is and why it's important. IWM is an exchange-traded fund, or ETF, that tracks the performance of the Russell 2000 index, which is a stock market index that measures the performance of small-cap companies listed on the U.S. stock exchanges. Small-cap companies, as the name suggests, are typically smaller in size and market capitalization compared to their larger, more established counterparts. The Russell 2000 index is named after the Russell Investment Group, which created the index in 1984. It is considered a benchmark for small-cap stocks and is composed of the bottom 2,000 stocks in the Russell 3000 index, which is a market cap-weighted index that represents the 3,000 largest publicly traded U.S. companies. Now, why is IWM important? Well, for one, small-cap stocks tend to be more volatile and risky compared to large-cap stocks, but they also have the potential to offer higher returns over the long term. By investing in IWM, investors can get exposure to a diversified portfolio of small-cap companies without having to research and buy individual stocks. This makes IWM a convenient and easy way for investors to gain exposure to the small-cap market. IWM is also popular among investors for its liquidity and ease of trading. It has an average daily trading volume of over 22 million shares and is listed on multiple exchanges, making it easy for investors to buy and sell shares. Now, let's delve into the specifics of IWM. As an ETF, IWM is structured as a fund that holds a basket of stocks that track the performance of the underlying index, in this case, the Russell 2000 index. The fund is managed by BlackRock, one of the largest asset managers in the world. IWM has a total of 2,000 stocks in its portfolio, which are selected and weighted based on the market capitalization of the underlying companies. The top 10 holdings make up about 10% of the fund's assets, and the top 50 holdings make up about 30%. This means that IWM has a fairly diversified portfolio, with no one stock having a large impact on the fund's overall performance. Some of the top holdings in IWM include companies like Zscaler, Guardant Health, and Moderna, all of which are in the technology and healthcare sectors. These sectors have been performing well in recent years, and their inclusion in the fund has helped drive strong returns for IWM. Since its inception in 2000, IWM has had a strong track record of performance. It has delivered an average annual return of 8.5% over the past 20 years, outpacing the S&P 500, which has returned an average of 7.5% over the same period. IWM has also performed well during times of market stress, such as the 2008 financial crisis. During that time, the fund lost 37% of its value, while the S&P 500 lost over 50%. This demonstrates the potential for small-cap stocks to offer some downside protection during times of market turmoil. One important thing to note about IWM is its expense ratio, which is a measure of the annual fees charged by the fund. IWM has an expense ratio of 0.19%, which is relatively low compared to other ETFs. This means that investors can expect to pay relatively low annual fees for the convenience and diversification offered by the fund. In conclusion, IWM is a popular and convenient way for investors to gain exposure to small-cap stocks.